happy Friday, Andy, and I'm glad to see you're pawing the ground here.
Oh, I search for those metaphors. What interested you in the markets today, John?
The market's very scholastic. It's all over the place. So, it's. I think as if you talk to traders, they would say it's a very difficult market to trade. There's lots of stocks that are up 2 or 3%, and lots of stocks that are down, and that's really been the story of the market for the past 45 trading days or so. I would say there's really it's been broadening out. But it's also been a situation where you're seeing a real dispersion of return. I mean, even in the Magnificent Seven or the Magnificent Eight or whatever it is now, you're seeing some stocks are doing really well. Meta was up again today. I think the 19 days in a row. I think total return year to date's around 26%, and then you have other stocks that are much more modest. The S&P's up 5%, and yet Nvidia, the big star, is only up 3%. Bank stocks are up 6% year to date. So it's a market that's all over the place. Another interesting one was Trade Desk, which is into connected TV advertising, which is a rapidly growing business. Has been growing like stink since 2016 when it went public. Announced earnings that missed slightly by analyst projections. Yesterday was down 32%. So investors are really finding a situation here now where you really want to make sure you know what you own. You want to be committed to owning what you own. Markets have produced very strong returns, as you know, for the last 2 years. We're off to a strong start. January up 5 or 6%. Annualized, that's a 72% return or so. If we keep doing that kind of stuff. So you got to really know what you're doing here, and you got to be very convinced and hardcore about what it is you own and why you own it. Federal Reserve Board's been lowering rates, but rates are actually moving higher. Yeah. With strong economy. So it's challenging out there.
Let's have a look at that old US 10-year bond yield, very important global financial metric. It has come off over the past couple of sessions, but when you see that rise, that's going to increase interest costs for big borrowers like governments and corporations.
Yeah, it's one of the reasons I think that investors have been confused why the U.S. economy's been so strong is, first, you have a big demographic shift. There's a lot of baby boomers that are actually benefiting from high interest rates, but also governments are struggling with high interest rates because they're having these massive deficits. The U.S. government's spending a deficit of 6% of GDP, which is massive. Canada's doing at 2% of GDP, and we think they're out of their minds. So they're at a point here where the government's been raising interest rates, but at the same time they've been spending massively, and that's what's really, I think, propelled the economy. And now you have the situation where the administration down south is introducing potentially highly stimulative policies in terms of lowering income taxes, keep spending, and then introduce tariffs. So that's potentially inflationary. You can argue whether it's a one-time or not. And so you've got a situation where there's a lot of uncertainty. Interest rates, the bond vigilantes are saying that the government is spending too much money. You need to get that under control. And yet, there's not a lot of real commitment to do so. So you have to sort of wonder, 6 months ago, people were saying there was going to be another 150 basis points worth of interest rate cuts this year. We're now down to maybe one sometime late next year. And people are beginning to say, maybe the economy is so strong that the Fed may actually have to raise interest rates. Once again, lots of reasons for caution, listening, thinking, observing, maybe not doing too much buying or selling right now.
John, you always are a keen, sometimes acerbic observer of the markets. Is there a cliche out there or a myth that's really annoying you these days?
I guess one would be buyer beware. And there's a lot of talk about AI, and Meta was announced today they're going to be doing robotics as well as AI, and I think that you're seeing companies come out and make these announcements, and there's there's just these instantaneous responses by computers mostly, and I think that's the thing that I'm finding a bit frustrating. You know, we're cautious in the markets right now. We actually are positioned to see some turmoil. We'd like to see some turmoil, frankly, but the markets are holding in. And you know, it's confounding people. It's, you know, we're finally have everybody's all in the boat after 2 years of people being pessimistic. They're all optimistic now with the markets at record highs, and I think a great deal of uncertainty. So I guess the cliche that I would actually be all in favor right now is buyer beware.